The following standard accounting concepts are providing in end-to-end financial solution in the cloud. 1.0 General Ledger. Every company must maintain accounting records. General ledger is a complete record of financial transactions over the life of a company. The ledger holds account information needed to prepare financial statements, and includes accounts for liabilities, assets, owner's equity, revenues, and expenses. General ledger typically used by businesses that employ the double-entry bookkeeping method, where each financial transaction posted twice, as both a debit and a credit, and where each account has two columns. Because a debit in one account offset by a credit in a different account, the sum of all debits will be equal to the sum of all credits. A company's general ledger can either be a physical book in which credits and debits posted, or an accounting, computer program where the various credits and debits entered. For example, when a business pays the electric bill, the amount entered the general ledger as a debit to utilities expense, and a credit to cash. Because every financial transaction affects both a debit account and a credit account, the sum of the total general ledger debits and credits should always be equal. If this is not the case, then the general ledger to be out of balance, and must corrected before accurate financial statements drawn from it. 2.0 Trial Balance. General ledger summarized in trial balances and used to generate financial statements such as an income statement and a balance sheet. While historically the general ledger handwritten in an accounting book, today most businesses use computer software to manage the ledgers. While a small business might have a simple general ledger, the general ledger of a large business is likely to be overly complex, involving multiple subsidiary ledgers. 3.0 The Chart of Accounts, COA. The Chart of Accounts, COA, designed to capture financial transaction data for general ledger. Each account in the chart of account assigned a unique identifier, i.e., an account numbers. Each account in the chart of account classified into one of the 5 categories: liabilities, assets, equity, in liability account i.e., shareholders' equity, income, and expense. Financial accounting, end-to-end financial solution in the cloud, system will record financial transaction data and will provide books, ledgers, trial balance, profit and loss, and balance sheet. It will also provide confidential information to decision makers and for internal auditors and external auditors. 4.0 Bookkeeping for expenses. The cloud-based end-to-end financial solution in the cloud system design is a double-entry bookkeeping system in which expenses recorded as a debit to an expense account and a credit to either an asset account or a liability account, which are balance sheet account. The following types of financial business transaction taken to care, by the designed financial system, end-to-end financial solution in the cloud. Liability accounts represent the diverse types of economic obligations by a business, such as accounts payable, bank loan, bonds payable, accrued interest. Asset accounts represent the diverse types of economic resources owned by a business. Common examples of asset accounts are cash, cash in bank, building, inventory, prepaid rent, goodwill, accounts receivable. Equity accounts represent the residual equity of a business, after deducting from assets all the liabilities, including retained earnings and appropriations. Revenue or income accounts represent the company's gross earnings, and common examples include sales, service revenue, and interest income. Expense accounts represent the company's expenditures to enable it to operate. Common examples are electricity and water, rentals, depreciation, doubtful accounts, interest, insurance. Contra accounts, from the term contra, meaning to deduct, the value of which are opposite the 5 above mentioned types of accounts. For instance, a contra asset account is accumulated depreciation. This label represents deductions to a permanent asset like building. 5.0 Control account. Control account. A control account is a summary level account in the general ledger. The control account contains aggregated totals for transactions individually stored in subsidiary level ledger accounts. Control accounts are most used for accounts receivable and accounts payable, since these areas contain a large volume of transactions, and so need to separate into subsidiary ledgers, rather than cluttering up the general ledger with too much detailed information. The balance in a control account should match the total for the related subsidiary ledger. control accounts are most used by large organizations, since their transaction volume is extremely high. A small organization can typically store all its transactions in the general ledger, and so does not need a subsidiary ledger that link to a control account. 6.0 General Ledger Code. A 6-digit coding has designed. These general ledger codes are related with profit and loss and balance sheet. The structure of general ledger code as shown above. First character will signify major group code. First 2 characters will signify subgroup code. First 4 characters will signify group code. Last 2 characters will be th. Success by Design and Practice book written by author Pradeep K. Suri for your library. Scan QR code. For business intelligence, BI, practice scan QR codes online and click the graph and view the result. In-depth understanding. Define your organization COA, chart of account. Keeping in mind, by, business intelligence to AI, artificial intelligence. Major heads of chart of account. Liability, assets, balance sheet. Income, and expense, profit and loss. The chart of accounts, COA. The chart of accounts, COA, is designed to capture financial transaction data for general ledger. Each account in the chart of accounts will be assigned a unique identifier, i.e., an account number. Each account in the chart will be classified into one of the 5 categories: liabilities, assets, equity, in liability account i.e., shareholders' equity, income, and expense. General ledger, GL, important heads. Liability accounts. Current liabilities, for any accounting head user can open subledger with control account. Tax payable. Income taxes payable. Other taxes payable. Employee benefits payable. Current portion of long-term debt. Deposits from customers. Other current liabilities. Long-term liabilities, for any accounting head user can open. Subledger with control account. Notes payable. Land payable. Equipment payable. Vehicles payable. Bank loans. Deferred revenue. Other long-term liabilities. Equity account, for any accounting head user can open subledger with control account. Started capital. Capital surplus. Retained earnings. Current assets. Cash on hand, main cash book. Petty cash. Bank account, Bank 1. Bank account, Bank 2. Bank account, Bank 3. Bank account, Bank 4. Investments, money market. Investments, certificates of deposit. Accounts receivable. Other receivables. Allowance for doubtful accounts. Raw materials inventory. Supplies inventory. Work in progress inventory. Finished goods inventory, product number 1. Finished goods inventory, product number 2. Finished goods inventory, product number 3. Prepaid expenses. Employee advances. Notes receivable, current. Prepaid interest. Other current assets. Fixed assets. Furniture and fixtures. Equipment vehicles. Other depreciable property. Leasehold improvements. Buildings. Building improvements. Land. Accumulated depreciation, furniture and fixtures. Accumulated depreciation, equipment. Accumulated depreciation, vehicles. Accumulated depreciation, other. Accumulated depreciation, leasehold. Accumulated depreciation, buildings. Accumulated depreciation. Building improvements. Other assets. Deposits. Accumulated amortization, organization costs. Notes receivable, non-current. Other non-current assets. Other assets. Deposits. Accumulated amortization, organization costs. Notes receivable, non-current. Other non-current assets. Revenue accounts. Product number 1 sales. Product number 2 sales. Product number 3 sales. Interest income. Other income. Finance charge income. Shipping charges reimbursed. Sales returns and allowances. Sales discounts. Cost of goods sold. Product number 1 cost. Product number 2 cost. Product number 3 cost. Raw material purchases. Direct labor costs. Indirect labor costs. Heats and power. Commissions. Miscellaneous factory costs. Cost of goods sold, salaries and wages. Cost of goods sold, contract labor. Cost of goods sold, freight. Cost of goods sold, other. Inventory adjustments. Purchase returns and allowances. Purchase discounts. Expenses. Default purchase expense. Advertising expense. Amortization expense. Auto expenses. Bad debt expense. Bank fee. Cash over and short. Charitable contributions expense. Commissions and fees expense. Depreciation expense. Dues and subscriptions expense. Employee benefits expense, health insurance. Employee benefits expense, pension plans. Employee benefits expense, profit sharing plan. Freight expense. Gifts expense. Insurance expense, product liability. Insurance expense, vehicle. Interest expense. Legal and professional expenses. Licenses expenses. Maintenance expense. Meals and entertainment expense. Office expense. Payroll tax expense. Penalties and fines expense. Other taxes. 2 of 2 expenses. Rent or lease expense. Repair and maintenance expense, office. Repair and maintenance expense, vehicle. Supplies expense, office. Telephone expense. Training expense. Travel expense. Salaries expense, officers. Wages expense. Utility expense. Other expense. Gain/loss on sale of asset. Thank you.